Okay, we're ready to start. Hello and happy Monday. Thank you all for joining the Alumni Society today for the latest installment of our Microlearning Series, which provides actionable advice and insights from members for members. I'm Christina Merrill, Member and Community Engagement and Communications Manager here at the Alumni Society and a proud graduate of Columbia. Today, I'm happy to welcome member Adrian Mendoza. Adrian is the founder and general partner of Mendoza Ventures. Adrian, thank you for joining us.
Oh, Christina, thank you for having me. It's really been an honor to be a new member to the Alumni Society, and especially to be able to cover a topic like today. And it's something that I've heard that other members have requested. So I'm happy to start the conversation. So let's go for it.
It's great to have you with us today. Thank you so much. Folks, time permitting, we will open the floor for questions from the audience. So if you have a question for Adrian, feel free to go ahead and drop it in the chat and we will try and get to it. But yeah, let's go ahead and dive right in. So Adrian, tell us a little bit about yourself.
Yeah, so I am a product of Mexican family, first generation. So my parents are from Mexico, grew up in Southern California, and in 1998, so I did my undergrad at USC in mid to late 90s, don't want to date myself. And then came to Harvard in 1998, did a split program between the design school and HBS, and decided to stay in the Boston area in the emerging tech scene that was there. And really the focus of what my personal work has been is not only promoting us as Latinos, but also getting us to be more in tech, more in finance. And that's really for us the mission of today and the mission of even the topic of what we do here, what at Mendoza Ventures, but also what, we're doing at the Alumni Society is how do we get more Latinos to be, controlling their finances, to growing net worth, but also doing what I did is picking up from where we came from and then sort of building the next generation of Latino investor.
Fantastic. Thank you for sharing that journey. And tell us, what do you do today?
Yes, so I am the founder of Mendoza Ventures. We are the first and one of the largest Latino-led venture capital funds in the East Coast. As I said, it was from Southern California. Really the genesis of where we started at Mendoza Ventures is it's run by myself and my partner, Jennifer. We were startup founders. We started our first startup in 2008, 2009. Mid 2014, the board said, hey, like all startup founders, go find something to do. And one of the things that we took back in our journey is that as we built our companies, as we built our startups, we saw no one that looked like us. And there were definitely no Latinos writing checks. There were definitely no Latinos starting company. There was definitely no women starting companies or writing checks. And during our journey of starting a company, we like to say that, as Latinos, it really is, a family business. These startups started in our house. My wife became the COO because they were in our living room. And then later we ended up growing these businesses. And as we took a step back in our plan of transition, we realized that we can have more impact in writing the checks than being the ones operating the company. So we took our experience operating the company. We did this at about mid 2015. And in 2016, we started Mendoza Ventures. It was really just our money from that exit. And we started investing in early stage founders in AI, fintech, and cybersecurity. Our second investment, which was led by two Latinos, was the first company we sold. It generated a 10x back to us in 5 months. And I'm proud to say that that's actually where VC Puppy came from. About a year ago, I was at that founder's wedding speaking there. So we've been able to change the entire direction of that family. And we saw that the power of what venture capital and investing can do is to not only generate net worth, but also change who is running these companies, how they're run. Mid 2018, we decided we were onto something after having sold the company very quickly. At Mendoza Ventures, though we're Latino and women led, we also focus on not underrepresented founders, but overlooked founders. The incredible talent that's out there, regardless of where it is. So we raised a second fund in 2018 to 2021. That includes some incredible investors, especially some Latinos in finance, some corporates like Carta. And then about 2022, we were approached by Bank of America. They said, hey, we really like what you're doing in terms of 90% of your portfolio is diverse founders. We saw the diversification of the capital stack. You're putting diverse individuals on boards. You're a diverse team. We would like to anchor your third fund. So last year, we did a first close on our $100 million fund anchored by B of A. Since then, we brought in Truist Ventures, family offices that are owned by Latinos here in the US. And so it's really about connecting the capital stack from diverse individuals like myself, like Latinos and Latinas, down to affecting diverse founders, down to how do we affect diverse communities through financial inclusion, financial access, and getting financial products and financial inclusion type products to Latino communities, underbanked communities. And really that's what gets us up in the morning, is being able to diversify the capital stack up and down.
Love it. That's a really interesting journey. Thank you so much for sharing. You certainly come a long way in a short amount of time, and congratulations on the deal with Bank of America. That's fantastic as well. So let's have let's just have a quick educational moment, if you will, right? What is the difference between private equity and venture capital?
Yeah, that's a really good question because it comes out a lot. And for us, it's venture capital is part of private equity. Where in private equity, you're investing longer term, these are anywhere from 15 to 20-year funds. You may do a private equity fund may invest in 2 to 3 deals. These are these big KKRs. And the goal of private equity is you're mostly, when you'll hear the topic, lower middle market, mid market. Private equity funds are buying businesses that are cash flow positive, that have positive EBITDA. And then the goal is to then they go and sell these businesses with, they put credit on top of it and maybe like debt, and then try to sell them at a 5 to a 10x. Private equity funds may go in, pack a few other businesses together. And this is what you hear about in the news, the Apollos, the KKR that are raising, $100 billion funds. Your typical fund size in private equity is, for a first-time fund manager is 500 million. And then usually they're at an average ever from 5 to 10 billion. So these are large dollars, but they're being deployed into much larger companies. Where in the span of venture capital, venture is a little different because it's much earlier stream in the life cycle of a business. Where in private equity, you're going to have, $1 million to 5 million of EBITDA. In venture capital, this is these startups. These are 0 to 200K in revenue, 2 founders and a dog that are starting a company. And for us, I'm a big believer that venture capital is really the genesis of starting an innovation economy. I like to say that there's 2 types of businesses out there: businesses that you sell, and then businesses that are lifestyle businesses. A lot of private equity business are lifestyle business. You have a founder, a family that is making 5, 10 million in EBITDA, then is able to find a good exit. Venture capital, the life cycle is those businesses that are selling for 2 to 500 million, or that's what's IPOing. This is where you're going to see the Kavas, you're going to see the Instacarts that go into the public markets. But the genesis of this is starting very, very early on at this, that 1 to 200K in revenue, that 1 to 5 employees. And venture is really focused on the tech economy. But this is where I think, from when you look at the entrance into private equity and venture capital, for us as Latinos, is the entryway for us to found companies, but also starting to invest in companies. It's really about growing the innovation economy in our areas, because private equity, these are 10 to 20-year life cycles. Capital that's made in private equity is traditionally recycled, goes back into longer-term capital gains. In venture capital, and this is where Silicon Valley comes from, the capital that's made in venture capital gets recycled back as philanthropy, as angel investment, as more venture capital, usually in that 15 to 17-year timeframe. And that's really what's the power is. I'm a big believer that regardless of whatever we do, VC dollars are there to help grow that early stage founders. But more importantly, it's about getting those dollars to individuals that look like us on this call.
Amazing. Thank you. And so who is best positioned to get into the venture capital private equity space? What does the profile of a qualified candidate look like?
Yeah, absolutely. That's another really good question. So when you look back at the landscape of Latinos in private equity, Latinos in venture capital, we don't have a history of being in private equity. There are very, very handful of funds that are, venture capital or PE funds that are owned by Latinos. And when you look at, for example, African Americans in private equity, you have a 30 to 35-year history of Willie Woods, Mike Porter, Robert Smith, that have created a legacy of individuals that grow in these positions. They start off as associates, they then become partners, they then spin out their firms. The majority of funds that are run by Latinos, really the profiles are very much like that of Mendoza Ventures. Started by an owner operator, an entrepreneur. I don't come from a history of, private equity. I like to say that, in my house, my mom was a bookkeeper and I'm the son of a cabinet maker. It was really about our journey to get into this space was through entrepreneurialism. I have a family of entrepreneurs, and that's very common for most fund managers and Latinos, and even those that try to work in venture capital. So this is about the ones that are leveraging your life experience, but it's very traditional than traditional who's in the white guys that come out of Stanford that go into PE. And really, this is going to be the next question about how do we do it? How do we start getting into this? And there's different roles that you can play. I would say there's 3 roles that we can play. And so, Christina, why don't we jump into the next question and we can talk about those 3 roles?
Absolutely. Next question is, how can Latinos get into the venture capital private equity space?
Yeah, I would say there's 3 directions that a Latino can do this at. The first thing is a job in venture capital and private equity. The second one is starting a fund, a venture fund, a private equity fund. And then the third one is becoming an investor in venture capital, private equity. Before I go down the route, just from the education of everyone, there's 2 ways to become an investor. The first one is, to become an accredited investor. And that's when, as a young professional, you can, that's to be defined as accredited investor. There's no certificate that's out there. There's no, school to become an accredited investor. It's all self-reported. So if someone says you need a certificate, you can laugh at them. It's all self-reported as an individual. And usually an accredited investor is you have a net worth of $1 million that includes all of your assets other than your primary home. But these are your real estate investments. These are, your stock investments. It's your net worth has to be over $1 million. The second one, and again, these don't have to be, all at the same time, is that you need to be able to make over $200,000 a year. So if you're a young adult, a professional in finance, you are an accredited, and you're making over 200K a year, you're an accredited investor. If your spouse is an accredited investor, per SEC changes, you are an accredited investor. And then for those that are working in finance, you have a Series 6.5, a Series 7, you're also now considered an accredited investor. And that allows you to have a level of sophistication to be able to start investing on the side, angel investments, fund investments. Funds like ours are a 3C1, which actually allow accredited investors to invest in fund vehicles. The other side is what's called the qualified purchaser. And this is more at what would be referred to as a 3C7, which allows you to invest alongside larger institutional investors. Most private equity funds require a qualified purchaser. And this means that you have to have $5 million in assets to be able to be considered a qualified purchaser. But there's so much you can do as an accredited investor. So when we talk about the 3 ways, and they're not all separate. They could all be done at once. They could all be done separately. But the first one is we get asked by a community of younger undergraduates, graduate students that are saying, hey, how do I become, an analyst? How do I start working in VC funds? And I think I'll start there. Really when I talk to someone young that wants to get into this business, there's a couple of magical things that you need, and this is to be able to start playing to your strengths. Everyone that goes to school has a lived experience, has operating experience, comes with some background. I was talking to another Latino a couple of months ago, and he said, "Hey, I come out of biotech, but I want to get into VC." And I said, leverage your superpower, leverage your biotech experience to be able to build your network in biotech. Who are the founders? Who are the investors? You inherently want to build around you a network of investors and founders so that when you do apply to that job, you're coming with your superpower. If you have a history in biotech, applying to a job at a fintech VC, maybe not the right fit, but it's really about matching to that superpower. Same thing if you come from a background in marketing and you're looking at how do I work within a fund, there's jobs like community managers, investor relations, but leveraging that superpower to be like, no, I can market the fund or I can market the firm for you. And really, it's about building that network. It's getting out to these events where founders and investors are and really getting yourself connected. The best associates and the best sort of people that get that first job in venture, they really surround themselves around a network of people, trying to build relationships, trying to really show a value add. And especially in areas like the Bay Area, Chicago, LA, where there are, and even New York or Florida, where there are a community of Latinos in venture capital. We have groups like VC Familia that focus on those trying to get their first job. There are fellowships like Somos VC has a fellowship for venture capital. At Mendoza Ventures, we have a fellowship for venture capital. We have a program that takes diverse and female MBA students to get their first job in VC. Because for me, it's like I want to take someone that has an MBA program that is at year one, year two, and that knows that wants to get into venture. And the goal is to really like launchpad them. I'm proud to say through our program, we've placed individuals at the state of Connecticut as an investor, at JetBlue Ventures, at Panache Ventures. So really, there are a lot of programs out there that are available for you to get your first job in venture capital or private equity. The second one is starting to, let's say you want to, build a fund. There's, because we're a world of entrepreneurs and scrappy individuals, there's a lot of people out there that are doing their fund one, and they don't have to be $10 billion. They don't have to be $500 million. Some of the first-time fund managers are taking $1 to $5 million and just, collecting them from other accredited investors, other people in their communities to just go out, build an SPV. They don't have to do a formal fund, but the goal out there is they might build an angel list syndicate, is to go out there and just start investing on behalf of individuals and getting that background. And really, what's going to tie all of these three sort of ways to get into VC is having a track record. Having a track record of either investing your money or other people's money to be able to show that you can manage dollars. So the second one, there are same things. Somos has there's a pile of accelerators out there for first time. Include Ventures has another accelerator program for first-time fund managers, for those thinking about it. They're looking to sort of, how do I start a fund? But there's a lot more education now and things to read than when I first started in 2016. And then the third piece, also building the track record, is there's individuals that may not want to work at, a fund. They may not want to start a fund, but they want to become investors. And really for us, that's, I think, the most exciting piece for me, because I used to say when I was a founder that I was an accredited investor for close to 10 years, but didn't have a place to invest because no one would let me in their funds. Nowadays, everybody wants me to become an LP in their fund, and I'm literally telling people no. And I'm like, hey, where were you when I was a nobody? And so for us, one of the things we're seeing is this entryway of Latino, diverse, and women-led funds that are at a smaller amounts, where you can place anywhere from a $50,000 to $100,000 investment as an accredited investor to starting to put money into a longer term strategy. VC is a long-term strategy. You should be able to, as an investor, have your pocket of, here's my cash bucket, here's my retirement bucket. This should be your risk bucket. This is the dollars that you can set afire and walk away from. But it's also going to be your highest return. So again, great risk comes great reward, but also it's going to be the riskiest part of your personal portfolio. And really the goal of that is in building a track record. This is, again, no offense to how I'm going to say this, but this is what we see the white guys do, is they come in, they start what's called their next life. And, these are men and women that are working 20, 30 years at these large banks, these large corporates, and they say, hey, I want to build that next life, which is an investor life. And really, for me, it's really important for us as Latinos that we start copying the models that are out there to build that next life, to start looking at how do we take part of our personal portfolio, not as all Latinos do, where we just invest in real estate, but also beginning to invest in alternatives to be able to, there could be the possibility of that 5 or that 10x, but really it's about getting more of us that look like us in that driver's seat. Because really the ticket to a venture capital fund is about getting access. It's about getting more Latinos into the room to become LPs, which are limited partners in funds, in both venture capital and private equity. Because what I really am excited about, what gets me up, is how do we get more Latinos and Latinas to be growing their net worth. I like to tell people 2024 is the year of building wealth for Latino communities. So that's really sort of on us in this call. And what I'm here doing is to really promote that out there. How do we do it? And so finishing that topic, and I'm Latino, I like to talk. So the goal of it is really that risk bucket. But also it's getting access to, what we've seen in our funds is that 20% of those that are diverse individuals that come into a fund begin to now invest in a second fund. The one secret that no one will tell you about venture capital, unlike private equity funds, in private equity funds, when you become an LP, traditionally 100% of the capital has to go up front as a limited partner. In venture capital, it's called over time. So that $50,000 to $100,000 to $250,000 first LP investment can be called in about 2 to 3 years. So inherently, it's not like, oh, I have to put this up front. Yes, you should consider like it all goes away, but at the same time, it'll be called over time. And so that really, once I explain that to individuals, it really lessens the gate down of who can participate in venture capital. One of the things that I love, and Christine and I had been talking about sort of this crossover, that if you're young and you are working in a private equity firm or you're working in a venture firm, you are also now considered an accredited investor, so can also start investing alongside funds.
Amazing, amazing. Thank you so much. And Adrian, we actually have a question from the audience. So how about we jump to that question, then we'll go back into the, yeah, great. So this is from Yesenia. We have a couple more. So this question is from Yesenia. Can you say more about how you get into PE as an SME that is interested in advising / working with portfolio companies?
So I'll tell you right now, everybody wants to get in to advise portfolio companies. Everyone, and how you get in is becoming an LP in funds. So what we do is we get the time. So I've been around for 8 years. Mendoza Ventures started in 2016, and the times that people have come up to me and said, "Oh no, let me advise your portfolio companies. We're surrounded by service providers every day. They are coming in and out. I could throw a rock and hit 10 service providers that want to help my portfolio companies." And having been a founder ourselves, we were surrounded by those that come in and were like, hey, let me help and make money on it. But the problem that we saw with a lot of them is they come in, they get charged to do due diligence, but then they don't miss the upside. The real upside here is advising portcos, being part of a fund, to be able to get the upside on what the fund is getting. And so really for us, when we do due diligence with portcos, that is reserved for our LPs first. Because the reason we do that is because their money is at risk, just like my money's at risk. I'm an investor in all of these funds. And so I'm very worried when you get people that just want to come in and say, hey, let me do this. Really, the power of it is the more that you can become an LP in these funds to show that you're willing to put your money at risk too, then you're able to get the benefit and upsides that go with, helping portfolio companies.
Amazing. And I think we have time for one more audience question. This is from Felipe. He wrote, love strategy 3. I'm heavily invested in real estate and thought to start my own RE fund, or I guess PE fund, sorry. But as you inferred, there's no money in it. How do you get comfortable with the risk of non-fixed asset-based funds?
Yeah, I mean, here's the thing. Most venture capital private equity funds, you're only able to take 2%, even at that. Maybe it's 1.5% off fees. Not a lot. If you're starting a $10 to $50 million fund, the manager, you're not gonna get rich off the management fees. The real fees is the carried interest. As both fund managers and as LPs, the real cherry on top is, and I'll walk through how this works. This is what we call the waterfall. And this will be both, you'll get to see the fund manager perspective and the limited partner perspective. So let's say you invest 100K, the fund sells a position, that first 100K comes back to you as a return of investment, and that's 100% tax-free. Yay, it's just a return of capital. Anything over that 100K is now subject to capital gains. And that capital gains based on where you are could be, usually it's traditionally 16 to 19%. If you're in a state with higher taxes like California, you're going to get charged more capital gains, a la Massachusetts as well, versus Texas, no taxes. So imagine you have now this capital gains. That is, what you get back first. You're going to get a portion of it. And then we, as fund managers, take 20% off the profit that we made. The one thing that that we've learned in the last couple of years is that there's a couple of things for early stage, investments. One is QSBS, the Qualified Small Business Credit, that actually shields your investment of capital gains per the first $10 million. So therefore, at 100 million across 12 investments, I may be able to shield, about $120 million in capital gains that then goes down to the early investors in the fund. So there really is a little bit of upside, and there's a couple of tools out there to help mitigate the risk because we're trying to get more dollars into the innovation economy. My view about investing is to diversify out of just one asset class. If you're heavily in real estate, you should start looking at venture or private equity. You should start looking at other sectors. The key here is diversification of your portfolio so that in the times when, if real estate is going down, you have, private credit returning, quarterly, 8-10%, venture returning on the mid to the long terms. You should really be building the most diversification out of your portfolio to be like short-term returns, mid-term, long-term returns.
All right, and thank you so much, Adrian. And we only have 1 minute, and I want to make sure that we get to this because this is going to bring up a cause that's near and dear to your heart. For those eager to learn more, what educational resources or materials do you recommend diving into?
Yes, in the chat, thank you guys for recording some of the sites that I sent over. There are places like Somos VC Familia. There's a lot of events that were done, coming up for Hispanic Heritage Month across both organizations to be able to get more Latinos. There is resources from the Alumni Society. Really, it's on you to be able to look at out of those 3 areas. And if you do want help or want resources, please reach out on LinkedIn. I always make myself available. A few of you have already reached out on LinkedIn saying, hey, I'm an Alumni Society member. How can I learn about this? Happy to share whatever resources I have because the more of us that are in this space, the more of us that are investors, fund managers, limited partners, really this is to get more of us out there investing and building our high net worth here.
Fantastic. Well, Adrian, thank you again so much for being here today and for sharing your insight. How can members get in touch with you? LinkedIn sound good?
LinkedIn sounds good.
Thank you so much. You have such an incredible experience and journey in this area. So we really appreciate you taking the time to speak with us today. So thank you again. To our audience, if you're interested in sharing your knowledge and insights in an upcoming Microlearning Series webinar, email us at members@thealumnisociety.com with your idea. Thank you again so much for joining us today, and have a great rest of your day.